Hey guys, how are we? Well, beautiful day here in Thailand as per usual, and just wanted to talk about what was happening actually in the foreign exchange market at the moment, because I think that's going to be really important for people to take note. So what seems to be happening at the moment is that Japan, Korea or South Korea and China are cashing in their US Treasury bonds. Now this is extremely important to take note of, because this is going to put a devaluation pressure on the US dollar. The reason why these countries would be doing this is because they're having to pay back debt in US dollars that is significantly devaluing their local currency, meaning that they have to pay back all their debts in US dollars using more and more of their local or domestic currency, which basically is sending them bankrupt, quite frankly. And this is what I was saying a couple of months ago in my videos, was that you're going to see developing economies really start to struggle, and because they need to use more and more of their reserves to pay back their debt. So the other reason why they would be doing that is to basically shore up the valuation of their own currencies, because what they're doing when they're selling off those US treasuries and bonds, what they're doing is they're basically creating more demand for their local currency, which basically pushes the value up. So if you see a huge increase in the US dollar, you're basically going to see them really scrambling to try and keep their currencies at a sort of an equilibrium or some sort of pegging. And once it gets out of that range, they're going to have to act very strategically to try and bring their currency back into that range. And that's what you're seeing at the moment. This really doesn't bode well for the US in the long term, because what you're going to see is that less and less people will want to use the US currency. And so that means that you're going to see countries look for alternatives. So what you're seeing now is that Russia and China and other countries are now about to get into discussions about having exchanges, so they can basically do a direct exchange rather than have to go through other avenues to use US dollars. So for example, say Saudi Arabia wants to sell some oil to Thailand. Normally what they would do is they would sell those that oil in US dollars, and then the Thai government or the Thai company would go and buy US dollars to pay for that oil. So that's always created a demand for US dollars. But what happens when you have countries and companies try to get around that sort of system and do a direct trade? So they might sort of try and do, yuan for oil, a direct swap, and create an exchange like that, rather than having to go via the US dollar. So that's what you're seeing at the moment. And as I said, this could really be the beginning of the end for the US dollar as the global reserve currency. This means that once the US loses that reserve status, there won't be basically an infinite demand for their currency. They can't just keep printing US dollars and have demand for that. Those US dollars will head back to the US and will cause hyperinflation. And potentially, that's what we're going to see at the moment, is a situation where at some point there will be a trigger, which is what I was saying in a previous video, I think the last video. There will be a trigger, who knows what it will be, where everyone will sell off their reserves of the US dollar. That will cause instant hyperinflation and send places into a complete bank run. So there was somebody who sent me a video yesterday in regards to what's happening in Lebanon. Lebanon at this point in time is going through bank runs. People are holding up banks and basically forcibly removing their dollars because the banks are refusing to give people their currencies, and these people don't care. The other thing that's happening there is the government is taxing people who are withdrawing their funds. So it's just a bit of a craziness that's happening. So what basically is a safe bet? Well, all bets are off. I did do a bit of a thing yesterday and basically said if you've got 401ks and IRAs in the US, you may be better to roll that over into an a gold IRA plan. I have put a link in the description below for a particular company that is highly valued. And if you're in Australia, you could put it in your superannuation into a super situation where you buy gold, and for that you'd probably want to use Ainsley bullion. Nowhere is perfect. Just make sure that you get the right or correct spot price when you are organising that. So just keep that in mind. So that seems to be where things are heading, and it's really not a good situation, to be honest. There was another point, and that's right, XRP. Someone has said XRP seems to be a bit of a Noah's Ark in regards to currencies and where to put value, and that could very well be the case. So Ripple, XRP is Ripple, I think, and but you have to make that decision yourself. I'm certainly not making any sort of financial advice there. That is purely up to you to make that decision and say, right, that's a good investment for me. So anyway, guys, going to leave that there. Just thought I would give you a bit of a heads up onto what's happening with that, because this is going to become an issue in a couple of weeks' time. And if you can get ahead of the curve, you're going to be very well situated. So anyway, guys, going to love you and leave you. And if you haven't liked and subscribed to the channel, do me a favor, hit the like button, hit the subscribe button, and we'll go from there.